Here are 6 dividend stocks with key positives that you might consider adding into your portfolio. Remember, the aim of this channel is just to talk about personal finance, investing, budgeting, and we want to create diversified portfolios just because we need to take advantage of all the markets. Also, dividend stocks are good because they provide consistent passive income, they provide financial security, and they also allow you to have long-term wealth growth. Okay, so these are the 6 dividend stocks, and this is in the Kenyan market. You can consider investing in this because they will provide you with great advantages. If you want to hear about the advantages of investing in dividend stocks, you can check out my previous video. I did a video on advantages of dividend stocks, and so let's get right into it. So guys, I just have my phone here because I will be checking out some details, and also as I'm making this video, it's the 6th of March 2025, so the stock prices might change and go up or down. So the first dividend stock that I would like to recommend is Stanbic Holdings, and the current share price is at 152.25 Kenyan shillings, and the key positives are the dividend yield is 11.6%. They have a high dividend payout ratio of 55%. This is a very important thing to consider when you're choosing dividend stocks, because you want to see how much percentage of their dividends they pay. Are they paying their shareholders a lot of dividends, or are they paying them like 10%? So, oh, before we continue, this information I got it from my brokerage company, the one I invest in, so it's quite legit. Okay, so the other thing is Stanbic Holdings growth is attributed to the net interest margins, balance sheet growth, and strong trading revenue. The investment banking subsidiary stands as a key contributor to non-funded income. It also has strong support from our parent bank, which is the Standard Bank Group. And the best part is dividends are paid twice a year. So you'll be receiving dividends every 6 months. So guys, Stanbic Holdings is a very good share to buy because they've been showing a lot of growth, and also the share price is 152. So you only need 100 shares. That will be 15k. So if you have 15,000 Kenyan shillings, you can invest in Stanbic Holdings. The other one is Absa Bank, and the current price is at 19.15. The key positives include the dividend yield is 10.7%. They have a high dividend payout ratio of 50.2%, which is good. Like half of their dividends they are giving us, the shareholders. I've told you this is an important part to consider. So the other thing is high operating efficiency compared to peer banks. Absa Bank is quite a strong bank. So the other advantage is that it has a strong asset quality, and the best part, they pay dividends twice a year. So guys, if you want consistent passive income, long-term wealth growth, you take advantage of compound growth, because when they pay you these dividends, you can reinvest again in other shares or whatever you want. The other share that I would like to recommend is Cooperative Bank, and the current share price is at 16 shillings 0.85. Guys, you have no excuse. You only need to invest 100 shares per share. So if you have 1600 shillings, you can invest in Cooperative Bank. You honestly have no excuse. The key positives are dividend yield is at 11.5%. They relatively have a higher dividend payout compared to market peers. They have a low credit risk exposure in high risk sectors like tourism, manufacturing, building, and construction. And obviously, if a bank is investing in these industries, it means it's making good money. So it also pays dividends annually. So per year you receive money from Cooperative Bank. That is a very great thing. So the other share that I would like to recommend is Standard Chartered. And as you've noticed, most of these shares are in banking. I think banking is like making good money in Kenya. And the current share price for this is 274 Kenyan shillings. So if you have 27,000, you can invest in Standard Chartered. You have no excuse not to start buying shares, guys. So the key positives are dividend yields of 10.3%, and they have a high dividend payout ratio of 50.8%, which is good. They have a high operating efficiency, strong asset quality, high liquidity ratio, and they pay dividends quarterly. So every 3 months you receive dividends from Standard Chartered, and they are performing very well. So guys, please check out these shares and invest in them. So the other one is Ncba Bank. Current share price is at 50 Kenyan shillings. The key positives are dividend yield at 10.45%. They have a high dividend payout ratio of 42.9%. And like you've noticed, most of these companies, they have a high dividend payout ratio. It's above 40%. Like, that's why I told you, dividend companies prioritize their shareholders. So you need to invest in some of these dividend stocks. Okay, they pay dividends every 6 months. So every 6 months you're receiving passive income, guys. This is what we mean by letting our money work for us. They have a strong asset quality, and they have lower cost of risk and high operating efficiency. The other stock that is great and I like it, I have invested money in it, is British American Tobacco, BAT Kenya. And the current share price is 380 Kenyan shillings. This is like the highest stock in all the ones that I've mentioned. So if you have that 8,000 Kenyan shillings, you can start investing in British American Tobacco. And the key positives are the dividend yield of 13.2%. It has a high dividend yield, and it has a very high, the best dividend payout ratio of 89.8%. Guys, this is one of my favorite stocks, just because they 80%, 89% of their profits they pay to their shareholders. So you'll definitely make good money from this. They have a quarterly dividend payment. So every 3 months you will be getting your payments, you'll be getting passive income. And this is just the best part about dividend stocks, because you receive passive income. They provide you with security because they're also protecting your capital, and they pay you just for holding their stock. So guys, if this video has been of help to you, like, comment, subscribe, share to people who you would like them to start their investing journey. And also guys, I have a free ebook on money market funds and treasury bonds. Please check it out on the description box. And also look out for capital gain stocks video. I will be doing that too, because obviously we want to take advantage of the market full circle, and capital gains are good if you're able to time the market. And yeah, we'll see how we go about it. I will see you next time.